This wasn't a robbery. No masks, no weapons, no alarms. And yet, $2 billion disappeared from one of India's largest banks. For 7 years, nobody noticed. Legally documented, officially approved, completely invisible. Until one day, a single employee asked the wrong question, and the entire scheme collapsed. This is the Nirav Modi case, and once you understand how it worked, you'll never look at banking the same way again. The setup. Nirav Modi was a jeweler, diamonds, high-end retail, stores in New York, London, Hong Kong. But the jewelry business, that was just the front. The real business was Letters of Undertaking, LOUS. Here's what that means. When an importer wants to buy goods from overseas, they need credit. Banks issue guarantees to foreign suppliers saying, "We promise to pay if our customer doesn't." That guarantee is called a letter of undertaking. It's supposed to be secured, backed by collateral, documented in the bank's core system. But at Punjab National Bank's Brady House branch in Mumbai, something was very different. The system. Between 2011 and 2017, two bank employees, Deputy Manager Gokulnath Shetty and single window operator Manoj Karat, issued LOUs worth over 11,000 crore rupees. That's roughly $2 billion US. These weren't backed by collateral. They weren't recorded in the bank's central system. They existed only in SWIFT, the international messaging network banks use to communicate. Think about that. The bank's own computers had no record of these transactions. But foreign banks received official guarantees on PNB letterhead, signed and authenticated through SWIFT. So here's what happened. Nirav Modi's companies would request an LOU. The two employees would issue it through SWIFT, completely bypassing PNB's core banking system. Foreign banks would see an official guarantee and release funds. That money would flow to shell companies controlled by Nirav Modi. Firestar Diamond, Solar Exports, Stellar Diamonds. These companies would then make token purchases of pearls or gold, just enough to look legitimate. But the real money, it moved offshore. The money trail. Follow the transactions. PNB issues guarantees to branches of Indian banks overseas, Allahabad Bank Hong Kong, Axis Bank Hong Kong, Union Bank of India, Antwerp. These branches release funds based on PNB's guarantee. Funds are transferred to companies owned or controlled by Nirav Modi and his uncle Mehul Choksi. From there, the money splits. Some goes to genuine suppliers, just enough to maintain legitimacy. But the majority flows through a network of shell companies in Hong Kong, Dubai, and the British Virgin Islands. Real estate purchases, art collections, a $50 million yacht. And here's the critical part. Every 3 months, when an LOU matured, a new LOU would be issued to pay off the old one. It's called rollover. For 6 years, this cycle continued. Old guarantees paid by new guarantees. No actual repayment. Just an ever-growing pyramid of paper. The total exposure by January 2018, 14,000 crore rupees. And PNB's central system showed zero. The collapse. In January 2018, Gokulnath Shetty retired. A new employee took over the single window operation. When Nirav Modi's companies requested the next LOU, the new officer followed protocol. He checked the core banking system. There was no record. No previous transactions, no credit limit, nothing. refused to issue the guarantee. That's when the scheme unraveled. Within days, PNB realized what had happened. They informed regulators. Markets panicked. PNB's stock dropped 29% in 2 weeks. By February, Nirav Modi and Mehul Choksi had already left India. The lie. The public was told this was fraud by a jeweler. But follow the money and you see something else. This wasn't just Nirav Modi's fraud. This was institutional failure at every level. First, internal controls didn't exist. SWIFT and the core banking system weren't integrated. For years, PNB knew this was a problem. Auditors had flagged it. But integration was expensive. It required system upgrades, training, disruption. So it never happened. Second, there was no transaction monitoring, no reconciliation, no one comparing SWIFT messages to internal records. A two-person operation had unilateral authority to issue billions in guarantees with no oversight. Third, external audits failed. Statutory auditors signed off on PNB's financials every single year. They certified internal controls were adequate. They were either incompetent or complicit. Who benefited? Nirav Modi, obviously. He walked away with an estimated $2 billion before fleeing to London. Mehul Choksi fled to Antigua, where he purchased citizenship. But they weren't the only beneficiaries. Foreign bank branches earned fees on every transaction. Correspondent banking relationships stayed profitable. Auditors collected their annual fees and signed clean reports. And here's the uncomfortable truth. PNB's senior management avoided scrutiny. When the scam was exposed, the blame fell on two branch-level employees. Mid-level officers. Convenient scapegoats. But systemic failures this large don't happen without institutional tolerance. The legal outcome. Gokulnath Shetty and Manoj Karat were arrested. They remain in custody, awaiting trial. Nirav Modi was arrested in London in 2019. As of now, extradition proceedings continue. He remains in the UK. Mehul Choksi is in Antigua. India has requested extradition. Antigua has not complied. PNB recovered a fraction of the loss through asset seizures, properties, jewelry, art. But the bulk of the money is gone. The bank's shareholders absorbed the loss. The stock never fully recovered. And the two employees? They faced decades in prison. The system? It faced a few headlines. The real lesson. This case exposes three truths about modern financial crime. 1. Complexity is weaponized. Normal people cannot follow what happened here. Letters of Undertaking, SWIFT integration, rollover guarantees, offshore vehicles. That complexity isn't accidental. It's designed to obscure. 2. Regulation is reactive. After Nirav Modi, RBI issued new guidelines. Banks were ordered to integrate SWIFT with core systems. Internal audits were strengthened. But the fraud ran from 2011 to 2018. 7 years. Regulation arrived only after the collapse. 3. Accountability is selective. 2 employees are in prison. Senior management retired comfortably. Auditors face no penalties. Foreign banks claimed they relied on guarantees in good faith. Everyone touched the money. Almost no one faced consequences. Why this matters now? The Nirav Modi case isn't an outlier. It's a template. Exploit system gaps. Use complexity as cover. Ensure losses are socialized while profits are privatized. And by the time anyone notices, The money is already offshore and the beneficiaries are beyond reach. Banking regulation treats fraud as deviation. But what if fraud is the system working exactly as designed? What if the gaps aren't accidents, they're features? Follow the money, and the answer becomes clear. This wasn't one jeweler stealing from one bank. This was an entire infrastructure built to enable exactly this kind of transfer. Legal in form, criminal in substance. And it's still happening.